GETCRACK. Wake up, motherfucker.
Says DeepSeek is a legitimate disruptor. He's out with a new note highlighting 3 bad signs for the market that could even push the S&P into a correction later this year. Barry Bannister is chief equity strategist at Stifel. He's got the lowest year-end target on the S&P across Wall Street at 5,500. Nancy Tangler is still with us as our guest host. All right, Barry, I think you and Nancy, I mean, you are like 2 very different points of view here, so this could be fun. But give us the, I hate to call it the glass half empty take, but explain to us how you see a path towards a significant correction here.
Yeah, keep in mind that even on a good micro story, macro sometimes rules, and the market's pretty much ignored the macro on the AI hysteria the last, I don't know, year. But the macro is starting to catch up. Inflation is sticky. I don't think the Fed's going to cut rates again. Frankly, the 10-year yield's too low if inflation proves very sticky and the Fed doesn't cut. And price earnings multiples just got too high. And I think we had to let some air out of the balloon. And we come down on the side of about 10% lower by the late 2025.
So, Barry, you don't look at this and go, power stocks 30% off, you know, leading chip stocks 20% off. This is a top 3, as Dan put it, buying opportunity.
No, it's definitely not a buying opportunity. I have some trouble with the way that the big tech companies with monopolistic cash flows are redeploying the cash into from a high ROIC business to a low return on capital business, even if it has the unit sales growth and the initial build out of the models to the S&P 500 type companies. It's going to have a very competitive landscape. And are they going to earn this capital return that they need, or should they have just given us the money back instead of spending it?
Barry, it's Dom. One of the big questions facing many investors today is this fear that this could be the triggering of a larger sell-off, one that we haven't really seen in quite some time now, aside from the 5% pullback that we got over the last couple of weeks entering here. Is there anything that would suggest to you that anything else could trigger any kind of a broader market decline at or near record highs like we are right now?
Well, over 30 years ago, we used to joke about how technology was such a displacement event business where new competitors would come in and destroy the entrenched stocks, that it deserved a lower multiple because of that. It's a short life cycle business that's got a very short competitive advantage period. But investors forgot about that. They bid up the stocks. The growth relative to value, large cap total return, one divided by the other on a 10-year compound basis, reached the absolute outer limits of the past 90 years. And that exact limit line is exactly where it peaked, the price earnings multiple and the outperformance of growth. So for us, it's just a very bubbly, ebullient market that's just got to take some air out of it.
Vistra, Constellation, and others are down by even more, 20 to almost 30% in the case of Vistra. Brian Sullivan joining us on the phone right now. I would say calling in on his day off, but it's not even really a day off, Brian. You're just not here with us. And what do you make of these moves? What are you hearing about them?
Yeah, thanks, Kelly. I'm down in Florida, what a day, giving a speech. And everybody's talking about this. And I wanted to call in and thank you because here's the reality. You mentioned Vistra Energy, VST, and I've reached out to all these CEOs, by the way, and getting some comments, some not. Vistra is down 29% to your point. Okay, Constellation Energy is down 20%, CEG. Now, if you believe that this new DeepSeek is going to wipe out demand for power for AI by 15, 20%, and thus reduce power processing needs, then maybe, I don't want to say this is the correct move. It's not my decision to decide whether or not a stock or a move is correct. But I think what we have learned is that many of these stocks may have been priced to perfection. In other words, these are supposed to be boring old utilities that barely move, but yet have moved huge on this AI power demand story. The one thing I wanted to add, Kelly, is that it's not just utilities. Take a look at the companies that are going to pipe gas to the utilities. The WMB, KMI, Kinder Morgan, ET, Energy Transfer, LB, Landbridge, those what they call pipeline or midstream stocks, they're also down 10, 13, 14%.
So Brian, when people say, well, is this a moment like in the 90s when what we thought we needed for the build out of the internet, we actually didn't need, or at least at the valuations that were applied? Is this that kind of moment?
I think we're going to find out, because I think, to your point, I know that, you and I get some of the same emails, and your frequent guest, John Spallanzani, and some others, the idea is sell first, learn, or ask questions later. And you look at it, okay, GE Vernova, bring up GEV as your stock ticker. I'm on the phone, so I can't see it. That stock, it's a power company. They're down 22%. Okay, Broadcom, AVGO, chip stock, I don't know much about it. I know Christine and others do. It's down 18%. Here's the point. I think Wall Street today is selling first and asking questions later. We're going to have a lot more comments from the CEOs. I will remind viewers that we had the CEO of NextEra Energy on Power Lunch. I think it was on Friday, Kelly. I'm getting old, so the time is going pretty
Friday.
quick. Yeah, and the reminder that he made, and their stock's not down much, I think it actually might even be higher, NEE is the ticker, is that what he said to us was that they expect 5 to 6 times an increase in power demand across the United States. Some of that is AI and data centers, Kelly, but a lot of it is just the re-onshoring of manufacturing and the electrification of the American economy. It's not just NVIDIA and AI.
Great point. Brian, appreciate it very much as always. We'll see you tomorrow.
Oh, what's up? It is January 28th, 2025. Okay, so we got buying the dip mode here yesterday, and NASDAQ and S&P have recovered. They're doing quite well, except for semiconductors still down. We have to wait for ASML earnings tomorrow morning, and then LRCX earnings after the close. And between those two is Jerome Powell, as we all know. So that's what we're all waiting for. So if you took a gamble yesterday and got the dip with me, then you should be fine. It's a gamble, though. No doubt about it. You're taking a chance. All right. So let's look at the stocks right now. And then after that, I'll try to do some scans with you guys and look for stocks. So those stocks that were talked about in that video were utility stocks that I talked about last week. So those drops you saw, 20, 30%. Could be interesting. So if they drop down further after Powell, then I'll be looking to buy. If they won't, then you got to wait, I guess, because I don't think it's worth it to buy now. It's better to use your money to trade. So if everything moves up, then the tech companies will move up. Bitcoin will move up, and we'll make another minor high. So look at the QQQ right now, NASDAQ 100. We're back in this box here. We're at the bottom of this box. If Jerome Powell pumps it, if we get a pump, we jump over that box, right? So going from 520 on the QQQ over to 527, upwards to 530 again, we get back to that high, and then somehow all the earnings into Apple and Intel and all that, if we're lucky. I don't know. I'm really doubtful about Intel, but let's hope that Microsoft and Tesla and all those pull through. Then yeah, we have a chance to just push this past 540, and then we'll make a minor new high. People will chase it again. They'll chase it into NVIDIA earnings mid-February, sometime mid-February. So mid-February, we'll have NVIDIA earnings. That'll probably be the top. NVIDIA won't have, everyone will be so bullish by that point. They forgot about everything that happened yesterday. They'll forget, like people have memories like a fishbowl, okay? Their memories are like fishbowls. So you got to take advantage of that. So what happened like 2 weeks ago when I said buy? And then later they're all happy and stuff. And now they're all screaming and yelling and getting scared again. So you trade the emotions. There's a lot of emotions going to happen into February. And that's when you get the setup for the real short. That will be when February goes into March and then tax season. Guess what? There's going to be something happening. Okay, something happening late February into March, I swear, that will cause it to crash again harder than it ever did. And then we'll have to worry about new targets, new targets. So let's say it gets up here and then goes back down. And this time it's going down in a nasty way. So it's not going to stop at 505 on the NASDAQ. It's going right back down here, maybe to 490, 490, 487, something like that. And that's when you buy again. So it'll be something like this, like what happened in the summer last year. Big red candles every week. Boom, boom, boom for a month or two. And then we'll hit back here. And then you'll be like, now is this the time to buy? Yes, that will be the time to buy. Okay. The blacks boycotting. Boycotting the market. Yeah, I don't know. Maybe Ignit, who knows? But yeah, so that's what and Kimmy Cakes yesterday was telling us about the medium, I guess you would say, or astrologer. I don't know. But she was saying like this person that she trusts, who predicted a lot of stuff that happened last year, was saying first half stocks go down, second half stocks go up. And that is exactly what I thought the stock market would do this year. So we would have a flat year. Essentially, if you just did the S&P again, like you are someone who just has the 401k set to default where you're not looking at it, you just go like whatever. So that's what's going to happen. Yeah, you're going to have a flat year. So you're going to have to trade. Either trade. That's why I said last time when Jerome Powell screwed up the market. So once he screwed up the market, it's over. It was game over. We're going to have a flat year. Because the only way we were pushing higher was we had to have a nice big bubble happening. And that wasn't going to happen. That wasn't going to happen. So flat year. And also not only trading, but selectively choosing stocks that make sense. And I'm going to go over a list of some software stuff that I saw did very well yesterday. Basically, they ignored the panic in the semiconductors, because what that DeepSeek was suggesting is that if you're a software company trying to train your software and use AI, it's going to be cheaper and it's going to be a lot more effective, right? That's what the Chinese have come up with, something that will take less power to run, less computing time to train. All this means that software companies don't have to spend as much, so they can get a bunch more profit off of you, the user, because they don't need to put more capital into trading AI. So software companies will benefit. The hardware guys, right? The NVIDIA and all that, they won't. So we can go over those videos later where they talk about that. But for now, just pay attention to the levels. Again, we're here at 520-ish. We want to get to 527 to 530 on Wednesday. And then Thursday, if all those earnings work out, so Powell didn't screw it up, ASML didn't screw it up on the earnings, then the rest of the earnings for the software side, Tesla and discretionary, everything like that, IBM, yeah, that should push it up to 540 if you're lucky. Because I swear, just like on that Monday, a lot of people probably were shorting at the bottom here. So now we got more puts. That huge volume, there must be a ton of shorters here. It'll make it easy, really easy for it to break out. Now let's look at the S&P. S&P didn't get damaged a lot. Okay, so S&P held. Its rectangle was down here between 592 and 596. And we only went halfway into there and then bounced right off of it. Okay, so now we're back at 603. Not bad. So for the S&P 500, it didn't feel a damn thing. So that tells me. So let's look at the small caps too. Yeah, not bad. I guess it's okay. But, oh yeah, by the way, we're going to have to look at HIMS. HIMS is trying to break out again. So weight loss drugs are still all right, at least for HIMS. So it bounced on January 10th at 25, that area, 24, 25. Yeah, I don't know. Because if it can break out of here for real, yeah, I'll just buy a ton more. I'll just buy a ton more of HIMS. Man, I don't know. I have to take a risk with Powell, though, tomorrow. I want to go over to the boycott list. Oh, do you have a... Oh, man, I guess... Yeah, you should email me, Ignit. Email me here. Give me the list here, and we'll talk over the next show. I have to I have to do stuff today, so I got to run after I do this quickly because I have to do this and I have to play you another video that's probably 30 minutes long. Yeah, so I got to get through that. So anyhow, so hymns, that's another thing. And scrolling underneath are like the stocks that I'm going to look at. And then we have to get through them. Like VST. Yeah, this is not bad. I mean, if you look at VST, let's see, VST, and we go for the weekly, you see that? The weekly chart is nice. So it dropped perfect. I was waiting for this to come back down here. Oh, man. So, yeah. So a lot of these nuclear and water cooling, I keep forgetting which one was water cooling. I think VRT is the nuclear one. And then VST is the water cooling one. I don't remember. Yeah, something like that. But either way, yeah, we gotta look at those. So they're scrolling on the banner right there. So I gotta look through these and see if these are good to buy sometime down the line. I don't think it's a good idea for you to buy it expecting to hold in the next couple months. I think if you buy it, it's only good for a quick trade. So if you're trading, like I said, I'm just using SOX L and then MSTR, MSTX, something like that, because otherwise, yeah, I'm not going to do much outside of that. So these are the only two I'm going to trade, and I'll put that up there here in the comments or the chat for you guys again, because that's what I'm using. Okay. Yeah, here you go. Okay, you can look at that. But yeah, VSTR, VST, and I mean VRT, VST, and then what else? What else we got? We got a whole bunch of stuff, huh? Oh yeah, Twilio. Okay. So I gotta look at GEV. Yes, okay. So nuclear, GE, General Electric, yes, down here. So GEV, another one on that list. Very good. And then what else? CEG. Yeah, I was waiting for it to pull back because I had it here, right, at 234, and I was selling on the way up, and I was like, man, this thing's gonna pull back hard, huh? And it did it. It did it. I'm not gonna say like it's good time to buy though. Again, yeah, it's hard for me to say that before Powell, you know. So this thing is like, and then they were like talking about another one. I didn't put this one on the list. I gotta look over and what this one is. TLN, that was discussed in that video. Same issue with CEG, so maybe I'll look at it some other time. And then, okay, yeah, uranium, the uranium stocks. Okay, so this one terrible. So uranium mining stocks, they're terrible. And then you have some infrastructure ones, LTBR. Yeah, this one's ugly. Yeah, but this one's always volatile, so I don't know. Maybe this is normal, even without yesterday's move. Maybe this is normal LTBR, and then E. Okay, we have the nuclear reactor stock right here. Had a big boost last week, a lot of volume, and then we come back. Not too much damage overall when you look at the big picture, because yeah, it looks like it's dropped 27%, but that's normal for this type of stock. That's pretty damn normal. So yeah, this guy, ooh, man, if it breaks out of this range, this thing could just be a big flyer. And then we got LEU. Okay, LEU. Okay, this one's not so good. It's still in this range. Yeah, not so good. Okay, but anyway, looking at that, all nice. And then we got two more. CLS. Celestia. I have no idea what this company does, but someone told me about it, and I saw the chart, and I'm like, oh, okay, some kind of semiconductor infrastructure type stock. That did quite well since September, and okay, I was waiting for this drop, and it got that drop. So yeah, I'm looking at this one too. A Lab. Oh, this one's a lot more ugly. Oh, okay, but it did quite well. Yeah, this is one of those IPO stocks that I just was like, wow. Ooh, Harp and earnings is coming soon too, so it's around the corner, February 10th. Ooh, I don't know. I don't know. I'll keep watching this though. Yeah. Okay. Now the other ones that I really like, software, Twilio. Twilio yesterday, I mean last week it had some earnings for some reason. They pre-announced earnings. I don't know why, but Twilio's been a stock I've been eyeing because this was making this bottom here and it was moving up since last earnings and now it's back up here. So I'm wondering, one pullback down, let's say it pulls back down in February, late February into March, then you probably would want to buy it before it tries to break 150 again. So I think it'll try to break 150, fail, pull back, and then try again later. So in 2 months, that's what my guess is for that one. And now, okay, still strong. So now that's another. So a lot of software companies ignored yesterday. So now Snow, these are the ones I just noticed. Snow, yeah, Snow has multiple ranges. It could try to break it again. So SNOW, Hubs, HubSpot, yeah, same thing. Ooh, it's almost at the top here. Okay, I'll definitely be watching this in the coming months. And then we have cyber. So anybody doing cybersecurity, this one's been doing quite well. Totally ignored yesterday's move. So yeah, again, another thing to watch. And CYBR and ISGR or what is it? ISRG. Yeah. This one had earnings last. Yeah, okay, it's pulling back now. So yeah, something to watch. Definitely something to watch. And Spotify, SPOT. Again, yep. We cleared out this high and then we're moving up. So yeah, watch for pullbacks. Watch for coming pullbacks. We got earnings too. February 4th on Spotify. So yes, keep those in mind. We have to watch all these software stocks because somehow I think this AI news is really going to boost them a lot more. So semiconductors are just going to be effed over for the they're going to be stuck in this range pretty much unless we get good earnings, then it'll try to break out of that range, which will be good for the Nasdaq for the coming month. Okay, but I wouldn't be doing anything long term. But I'm looking for stocks that will be good for the long term. So that's what I gave you all that stuff for, because I'm watching. Oh yeah, and Boeing will have earnings tomorrow morning. Also watch that. So if you missed buying it at 130, 140, maybe tomorrow will be your opportunity. Maybe it'll go down tomorrow and come back and retest 156. Another one to have for long term. Okay. So those are just potential long terms that I was giving you earlier that you can probably hold into next year, but we have to wait until February, late February. I don't think it's a good idea to do it now. Really not a good idea. But when you see strength like that in the software, it tells me that people are definitely very willing to overpay for software stocks. They're no longer probably willing to overpay for Nvidia or semiconductor stocks, right? So the money has to go somewhere. So if it's not going to small caps, it has to go there because small caps right now, as you can see, is stuck. It's still stuck here. But maybe that'll change tomorrow too. So then we'll finally see the market broaden out. And then it'll crash again. People will panic again. And then that's the time to buy. So, all right, that's the game plan for this year. But keep in mind all those things. So let's go to the videos that talk more about that AI stuff. Let's go.
Here with more on the state of the AI arms race is XIA, the CEO of AI consulting firm Monsanto and senior policy advisor at the Goldman School of Public Policy at UC Berkeley. Appreciate the time this morning. The street is really at a loss on some of these questions, specifically about this $6 million figure. Some elements of the street research today just sort of discounts it outright. Do you?
I definitely don't. I mean, the major introduction that came with DeepSeek R1 is not a massive novel breakthrough in a new type of AI. It's a novel breakthrough in the way that AI is trained. The environment through which DeepSeek has had resources and funding to be able to create AI models of their own has necessitated that they become more innovative, that they develop new techniques to do more with less. And what we're seeing at the heart of this innovation is a training technique that used to require two separate AI models that were usually about the same size, that you would need to scale up and train at the same time in order to be able to build something like OpenAI's O1. And what DeepSeek does is it makes it so you only need one and a little bit of another model, which exponentially reduces the amount of computing power that you need to be able to train a model, because you need less AI to be able to train the AI. And so I think that this technological advancement could create cost-cutting measures that are as severe as down to $6 million. Now, the question is not if DeepSeek is going to displace current existing AI leaders in the US, but the question is more so how soon before we adopt these techniques to supercharge our own AI on better hardware. If DeepSeek was able to build so much with older hardware, how much will we be able to build with newer hardware like that which is committed under Project Stargate that Donald Trump,
Yes.
President Trump just.
So where does that leave the question of whether or not our industry is overspending, over provisioning to the build out?
Well, let's think about it like this. If we are building the AI superhighway, then the equivalent of what DeepSeek just did was come out with a way to make existing cars 2 times as fuel efficient. Now, of course, if they're the only car on the market that has that kind of technology in it, then everyone is going to flock to use that type of car, because who doesn't want 2x fuel efficiency? That's the similar sort of thinking behind developers and the excitement in the community about being able to use some of these advanced AI tools for a fraction of the cost. However, once those techniques become adopted by the rest of the industry, it will call into question how much more powerful and how much faster we'll be able to move as the United States, given that we already have more hardware. Now, for folks who are wondering, well, why didn't we figure this out before? Have we been overspending? I think this is a larger challenge and a larger question of what we as Americans believe will drive innovation in the market. Up until this point, we've been following closed source models that are owned, developed, and created and maintained by private companies who claim that as intellectual property. What DeepSeek showed us is that their innovative solutions happened not only because of their unique environment where they were forced to build a little bit more creatively, whereas companies like OpenAI and Anthropic have access to a lot of hardware, so they might not have been thinking, how do we do more than with less here? But simultaneously, because they open sourced the model, they allowed anyone and everyone to see how the code was written. Their research paper and their technical report about their model is extremely detailed. They gave more detail than Meta has given in any of their open source models. And so because they opened up the knowledge base to be contributed to more people, their pace is moving faster. So the US has to ask, how can we not only compete on the closed source side with all of our proprietary companies, how can we also now invest in our own open source models to compete similarly?
Here to the real significance of China's, quote, low-cost AI model, this DeepSeek R1. Is the sell-off across those names he mentioned deserved? Raymond James Tavis McCord is here to look at that for us today. VC Bradley Tusk on why it's going to be hard not to use DeepSeek. Cybersecurity CEO Ivan Sarini is back to talk about the hack and how DeepSeek got so good so quickly. And Deirdre Bosa, who was all over this story before everyone else. Welcome to all of you. Bradley, I just thought it was interesting what you said about people using this model. By the way, I tried finally to download it this morning and couldn't. Maybe that's because of the hack. But what's your experience been, and what do you think the take-up ultimately will be here in the U.S. of this Chinese offering?
Yeah, I mean, look, as an early stage venture investor, there's no such thing as investing in a company that isn't either an AI company or using AI in some way, or at least has an extremely good reason if they're not. But if they're using AI in some way, then the cost obviously becomes very material and really important. And using OpenAI or any of these other companies is really, really expensive. And yes, I understand that DeepSeek is a Chinese company, but if any of my portfolio companies said, listen, we can build what we need at a fraction of the cost on an open source system, it's really hard as a fiduciary to tell them, no, you shouldn't do that. And so I think the problem isn't just that we have potentially a regulatory and trade problem. And the problem is we got out innovated. There was sort of this groupthink in the US where all of the companies approached this thing in the exact same way, and it really was all about sort of scale and cost. And like Alex Mike from Scale AI has made some really good points about this, which is we should be a lot more aggressive in innovation. We've kind of lost the innovation war on this, and we should ask, why is it that no one in America thought to do this?
Well, I think people would probably say, hey, we're working on it. Like, that's the next phase of all of this. And there's a whole shift in here from kind of training to inferencing, which is an important part of the story and makes it interesting that Broadcom's down. But before we get, or maybe I should turn to Tavis to talk more about that. We saw 15, 20% declines in some of these exposed names. Do you think that's warranted given what we've learned here about what DeepSeek's new model can do? Or do you think this is overdone?
Well, if it's just DeepSeek, probably not. But I think the reality is what we're seeing is capitalism at work. And nobody knows exactly how AI is going to play out. But there's a lot of money that's gone into the space. And what that means is there's going to be a lot of innovation. And some of that innovation isn't necessarily going to be great for profits of certain companies. And so, you know, when I see some of these names down 15, 20%, it just screams to me that there's very little conviction out there. So even though these names have been straight up for the last 2 years, people are buying charts, not businesses. And that's always a dangerous situation.
That said, it's not like they're selling indiscriminately. Meta's higher today, Apple's higher. Both of them are beneficiaries of lower cost inferencing models, right? Yeah. They are the ones who are kind of deploying this technology. If it's less expensive to make it, even if China got there first, we're going to get there eventually as well. So there is a logic, Tavis, to what the market is doing here.
Yeah, I would agree with that. I think in general, if you had to place a bet, is the real profit pool going to be on chips or models or applications that use those models? Like today, we're shifting over towards the application front. If AI is going to be a lot cheaper to deploy than most would have thought a couple months ago, that makes all the sense in the world.
Yeah. Deirdre, let's talk for a second about kind of how they got here. And one of the big controversies has been, did they do it with these inferior NVIDIA chips, these H800, which one's the better one? H100? So they did it with H800s. Let's just take it at face value because analysts say, look, it's possible that they did this and that the export controls forced this level of innovation. So thank you, DeepSeek, for showing the rest of the world it's possible. The question now is, do we keep with the export ban on these leading edge chips or not? And in fact, David Sachs, what do we call him, the AI czar, just weighed in on this on Twitter. He says, this shows that the AI race will be very competitive and that President Trump was right to rescind Biden's EO, which hamstrung American AI companies without asking whether China would do the same. It didn't. He says, I'm confident in the U.S., but we can't be complacent. There's a whole fight in here about open source AI models and whether we should be kind of going in the direction that OpenAI would prefer versus what DeepSeek and others are doing, kind of leaving this technology more open to the public. So how do you think policy-wise this is all going to play out?
Well, let's be clear. The export ban did not work. In fact, it backfired. It forced the Chinese to innovate in new ways that companies and giants here didn't have to. I call them the good chips and the dumbed down chips. The good ones are the H100s. That's the NVIDIA GPUs that everyone wants. NVIDIA 800s are the ones that the Chinese get because of the export ban. And what DeepSeek says it was able to do is create a model that outperforms some of our best models built here in America with those dumbed down chips. I mean, that is a point of debate. Some people say that the hedge fund of which DeepSeek was born out of had been sort of hoarding the better chips. But at the end of the day, Kelly, it doesn't really matter. We've moved on past that. We know now what DeepSeek proved is that these models and open source, nonetheless, I want to stress how important it is that DeepSeek's model is open source, can be built for a fraction of the price, whether that's 6 million or 60 million. That is far less than the hundreds of millions, fraction of the price, whether that's 6 million or 60 million. That is far less than the hundreds of millions or the billions of dollars that OpenAI, Gemini, Google, and others have poured into this. So I think that's also maybe why you're seeing Meta in the positive today, because it's also working on open source metas. In fact, I can't remember who was one of the people we spoke to in the Valley on this, said that Meta is probably racing right now to figure out what DeepSeek did and build on top of it. And so there's a new race that started in open source development, which is really key there. And that's why the companies that were working on closed source models like an OpenAI, real questions about their moat.
And Tavis, this all gets into this big pivot that's happening in the AI space from the massive clusters that were required to train these models to the ones that can do more inferencing, maybe have a little bit lighter. That's why you're seeing the power stocks down. You know, yes, early last week it was all about Stargate, and it's going to have 1 million GPUs, and it's going to require, you know, nuclear power. And now it's about, okay, and even if it were 5 to 6 million to kind of make the shift to inferencing, do you think that's enough for the likes of Broadcom, which should in a way benefit from that transition, to be down 18% today?
It seems extreme, but like, look, 3 weeks from now, we could be talking about something completely different. Innovation's happening really fast. It's really hard to predict in what ways it's going to happen and what companies are going to benefit on a specific form of innovation. I think all we know is that this market has thrown about $10 trillion of market cap into the AI theme, and it's going to be really volatile for some time. There's no set in stone way AI is going to get to market, and to think we know who the winners and losers are going to be at this point, or even to the degree they're public, is somewhat unknowable.
Yeah, there's a look at some of the biggest decliners, all in the energy space. Again, the people who we thought would need kind of the near-term amount of spend to support all of this. Sam Lessin, we talked to a few different people about this morning. He said $6 million in training has now destroyed $500 billion in meme-driven market cap. I don't know if it's fair to call it meme-driven, but in 2 business days. Roger McNamee said, look, it's obvious the Chinese approach is going to produce more value. It's not as wasteful. He says it exposes the ludicrous approach that American companies have taken to AI and calls the path unsustainable. Bradley, do you agree?
Yeah, I mean, ultimately, I think Deirdre got this right. If open source is here and it's what the market wants, and it's hard to see how that wouldn't be, we have to be able to adapt to that. So in part, that's what I think David Sachs was getting at in his tweet, which was, look, we're going to have to both move past the Biden executive order and allow open source, and the American companies are going to have to adapt really quickly. But the other thing is, it always feels like human beings have this tendency to think whatever is right now is what will always be, and that's never the case, right? It's really not the case with AI. But I remember, coming on CNBC multiple times in the past year where everyone just was super excited about NVIDIA and nothing can ever stop them, and all of a sudden $6 million just did. So I just really think it's important for people to be mindful here that we are in the early stages of something totally disruptive and transformative, and whatever you're doing, be prepared to pivot at any moment.
I was listening to one of the emergency podcasts from the weekend. It was one with Miles Brundage, Bradley, and he talked about how we shouldn't assume that just because these kind of inferencing models can be done with lighter compute that people don't still have a need for the chips. He likened it to creating Einstein and said, wouldn't you rather have 1,000 Einsteins than just one? I mean, wouldn't you rather even deploy multiple, types of this technology at the same time in order to get it, whether it's a homework problem or, a cybersecurity problem or whatever it is? So that's why I find this issue around NVIDIA, okay, maybe in the very, very near term, you could call some of the financials into question, but I'm sure DeepSeek, I'm sure across China, I'm sure everybody would rather have access to more NVIDIA GPUs at this point than fewer.
Yeah, that's absolutely true. But I think the problem is the disparity we're talking about is not $6 million versus $60 million. It's $6 million versus, $500 billion that Stargate was talking about, Trump the other day. The disparity is so massive.
It's not the whole number, though. 6 million was only the amount.
That was just the last
But that's
piece.
an important caveat. Yeah.
You're totally right. But overall, I just think that, yes, but because the cost of compute has been so expensive and the cost of energy for this has been so expensive that I think that just creates massive demand for something cheaper. But yeah, your point's right. Look, we don't, all we know is where we are today, and it's going to evolve in 20 different ways we can't even think of right now.
Deirdre, and Kelly, final word.
Yeah. On this point, what I hear from people in tech is that you're not going to see any kind of slowdown from OpenAI or Google or Microsoft, the companies that want to build the best models in America, because now it's just all the more existential for them. I mean, what DeepSeek showed is you can get right to the frontier and build something on that and innovate. But if you actually make more advances in the pre-training model, which has become a lot harder to do, then the U.S. is back on top. So maybe that drive is even more urgent, let's say, and you do need to spend all that money, $500 billion, hundreds of millions in capex. Maybe you do need to do that just to keep the U.S. ahead. I mean, I think now it's more uncertain, but the stakes have risen.
I think that's exactly right. I appreciate you all joining us today. Bradley Tusk, Tavis McCourt of Raymond James, our Deirdre Bosa, of course.
Okay, so let's look at ASML. ASML, tomorrow we'll have earnings, and this was during October 14th, Columbus Day. So what happened Columbus Day week? Okay, so Monday, Columbus Day, right? Indigenous whatever day. And on Tuesday, when the market really opened, because I think the market is open for Columbus Day. I keep forgetting. And then that Monday we saw, let's Let's see if it's true. Was it open Monday? Yeah, it was open Monday. So the market was pushing up the NASDAQ up, and you could see ASML going up, So, but technically it's a holiday, right? So, and then what happened the day after was earnings got leaked. So earnings got leaked on that Tuesday. So earnings was supposed to be released like a couple days later, and it got released Tuesday early. And then the whole thing crashed. It crashed the whole NASDAQ, and it crashed all the semiconductors. So if you look at the weekly candle here, you see we had some pretty significant down days on earnings from ASML. And that would have told you like, hey, the summer was like the top of the market at that point. You had chances to get out. You had a warning shot on April 15th on that earnings day. Then you had July, another warning shot. And then the week after, everyone started freaking out about the yen, Japan, like doing the Bank of Japan, doing all kinds of. So you had an early warning. You had an early warning. Come on. So things were happening already with these earnings. And then now, right? So we're right back where we are, right back to the bottom, the low of that Columbus Day, post Columbus Day drop, right here. So we're at 681 right now on ASML before earnings. So tell me this. Where do you think it's going to go? I have no clue. I'm just gambling that it's going to go up just because that we already had a drop yesterday. So people are already pretty pessimistic from yesterday. So I assume they bought puts, and the market makers won't make those puts be worth anything tomorrow. Maybe that's true. Maybe I'm wrong. If I'm wrong, then where's the next place this thing will drop towards? 580. Right here, 580. This is where we had a minor top in February 2021. Okay, so I drew it here and it got retouched here in October 2023. This was a big correction during the third to fourth quarter of 2023, and then it was touched in between these two areas right here, March 2022, touched again at the top, minor top on August 2022, before we had the vaccine news. Or no, it wasn't the vaccine news. It was the Fed pivot. My bad. Fed pivot here. And then you see a fight. You saw a big fight in late 2022 before it finally got up, before retesting, and then pushed up later on all the AI hype last year. So all this stuff here between 590 and 890, okay, or 900, is all AI move. Okay, this was all because of AI, and now the semiconductors fell, and then now we're revisiting AI. So if AI is real and they need more chips, well, this thing should go back to 900, right? If AI is bad, is not real, right? The demand from AI is not real, then we should go down to 850. Pretty easy to understand, all right? So go for that. Go for that. Look for that. So now we're going to go over scanning. Okay, so we're going to look for scans. So let's look at Sprouts Farmers Market. I like this. Very nice. You get a pullback to the 18 weekly moving average before bouncing. Very nice. So now your question would be, if this thing breaks out of here, we continue to trend or not? Good question. See what happens this year. Does this continue, or are we going sideways? Fail here and go sideways for the rest of the year. Is the trend over? Now, the question now would be, if the trend is over, should I buy or not? I'm going to try to look for stocks that have this trend, okay? This type of trend. So I need to search for it, all right? Very easy. Okay. Now, let's do that. Share screen here. So remember, I'm looking for stocks that have very good weekly trends. And this is what I'm doing. I'm going to do this scan. So this is from using Stock Charts Scan Engine. So I can look for stock, U.S. stocks, not ETFs, no ETFs. I'm not going to limit it by market cap. And what I'm going to do is I'm going to look for a weekly 18 simple moving average. All right. And the slope of that moving average over 13 weeks is a quarter, is greater than 0. And I'm also going to look for a slope of the 40-week moving average for over half a year, 26 weeks, half a year. So I'm going to look for those two slopes being positive. Okay. And then I'm also going to look for yesterday's action here. So I said last market close. So yesterday, I want to see the close and low of yesterday go below the 5-week moving average. So I'm going to say, like, there was a big drop yesterday. I want to look for stocks that have good trends but drop. All right. And then we can go. So then I can search and I can find something. Oh man, I got 1,579 stocks to look at. No. This ain't right. So so I'm getting all kinds of charts that don't look like Sprouts Farmers Market. I don't want these. So what did I do wrong? So what I did wrong is that I just said positive slopes. So here I'm going to make it better. I'm going to make it better and do it this way. So the 13-week slope of the 18 moving average line should be greater than 1.4. And then the half year slope for the 40-week moving average, simple moving average, is greater than 0.80. Don't ask me why I chose that. I just goofed around and changed the numbers to see which one gave me a better looking scan. All right. Now I'm going to run this scan because I'm not going to waste my time looking at over 1,500 stocks. Okay, 108, a lot better. So now I can go down the list and look. Okay, that looks better. See, you see stocks that have pretty good looking ones that are moving up over half the year, right, to a quarter. So they have this nice. So that's why you see that's why from August, I guess, from July to August, you see them moving up, moving up, moving up. So this is the one we like. And you see a lot of stocks that I've talked about before. Axon, Body Camera, right? You have Palantir in here too. I think Duolingo we talked about on John's channel at one point. Duolingo went from 175 to 350. So a lot of these type of good moving charts that we love to keep for long term. Palantir, beautiful. Palantir, my best friend, from 20 to 80 from last year at the low of summer. Very nice. Oh, you also have Royal Caribbean. Yeah, cruise lines also did well last year. So Royal Caribbean, I think Royal Caribbean actually has earnings tomorrow. I don't remember. One of the cruise lines has earnings tomorrow. Maybe it's Royal Caribbean. United Airlines, which was a big surprise. I wasn't in that one. I was just like, what the heck? Oh, shoot. It just had one good earnings and started flying. And then we have WGS. I talked about this one. I'm not in that one. It's an IPO or something like that. And biotech stock. Oof. And also stocks that were recommended from Tropes or All Seeing Guy, VRT, VST, right? So we have a lot of stocks that we were talking about before on this list. Let's see what else. Oh, LNG, yes. Latinos for Trump was interested in that one for natural gas. Yes, but now we got a pullback, right? So is this the time to buy? Is this the time to buy stocks that have good trends but got crushed yesterday? So that's why when you see a big red day, you want to start looking, oh, okay, I'm going to look for stocks that have good trends, had one bad day, and then decide, all right, now I'm going to put those stocks that I'm interested in buying in a watch list. And this is how you go doing it very quickly with just a scan engine like this. So you don't need to do the manual work. You just go here and do it like this very quickly and let the engine sort through everything for you, just using the technicals. That's it. That's all you got to do. So you can use that to filter out everything. Nobody has time to be looking at billion stocks, right? So this is all you got to do. Now, if you need help, you go here. You go to this thing. All right. Very good. Yeah, sample scans. And you can see they do a lot better because what I did was I just used moving averages. But they have better things when you use more advanced stuff. So there's like uptrend function here. So you can say uptrend is true. You can use that. And you also have another one with ADX, I think. So if you want to go, yes, stocks in long-term downtrend, you could also use ADX to filter it out. But all I did was I just used moving averages. But if you want to get more fancy, yeah, you can start going through the help and find examples and go like, okay. And then there's also one with rate of change. Rate of change, yeah, here. Okay, increasing rate of change. So you can see stuff that has a blow off where stocks suddenly move really fast. Yeah, so you could have a lot of examples here to take inspiration from, and you can make your own scans. All right, done with that. Very quick, okay? Very quickly. Now, let's move on to the cycles. So let's present the cycles and we see where we are with that. So I'm playing a video from the Foundation of the Study of Cycles, and you can get the link in the description. All right, and this will be 30 minutes or so. I'm probably not going to play all of it, 20, 30 minutes, but let's go.
This episode.
Anyone else is recommended review the November session anyhow.
Remember what goes up must come down, and baby, you've been flying too high.
I told you that in November already. So talking about cycles, this is not coming by surprise. So at least you see what happens if we are in that cyclic condition. But what cyclic condition? Let's talk about that today. So first, I will talk about the broader index. So let's have a long-term perspective on the semiconductor index before we drill down into shorter time periods. So what we see here is the semiconductor indices for the US stock market on a weekly scale, with the long-term perspective here using weekly data, right? So, and we see the latest data from today is even in that weekly data set where we had that down move today. So, but that's the weekly scale, latest data. And at the bottom, we can observe our spectrum on that plot. And that is a very interesting spectrum because, I mean, it's quite obvious what we need to talk about from a weekly cyclic perspective. There is one dominant cycle with 180 weeks length standing out in the spectrum. So there's no other decision to make. There's no other peak to the left. There's no other peak to the right. I just used the standard settings we apply here at the foundation. So using 850 bars as a starting point for that kind of analysis. So nothing special, pure basic standard setup as we use it here at the foundation. And that spectrum is really interesting because the right shoulder is going down to zero, the left shoulder is going down to zero. There's one clear peak, 180 weeks is so important. I often refer to that cycle. It's about the 41-month cycle, but not touching this today. 180 weeks is interesting. So let's have a look in particular for that cycle. Maybe let's adjust here. So first, I think the long-term perspective, let's view that in log scale. Yeah, it will not change the spectrum, but we'll make that a little bit more interesting here. So also activating the 180-week cycle here. And as you know, I mean, we are talking about timing here. So what we are connecting is the lows with the timing points of that cycle. And I often recommend doing this kind of quick cross-check on just using the timing of those cyclic signals in correlation to the data set, which is then, by the way, here we have a double O to the left, to the right, but anyhow, let's go to the center here and then again the upswing. So this is how you read a cycle here, and this reveals that we are on this upswing here, and then we have the upswing and downswing legs, and in almost all cases the reversal point was indicated by this long-term 180-week cycle. So that's why this is so important here. And we can now move forward to the current picture of that cycle. And this is why we talked about that in November. Yeah. So this is why I brought this long-term and short-term perspective back to you, because this long-term cycle, which is anyhow important, but obviously perfectly seen in the semiconductor index, topped out November 2024. So in general, what we see since late 2024 is a very perfect behavior I would like to observe on those important cyclic tops anyhow. So, and a surprise would be to the upside, not to the downside. So if we are now in that cyclic condition, or that the main theme for this market has rolled over, so since 2023, we have been in this upswing here, but now 1.5 years later, at the end of 2024, this whole cycle reversed direction to the downside. So the primary trend should roll over to the downside. So any surprise should be to the upside, not to the downside. So, and I mean, we will move over to daily and short-term analysis just very briefly, but that's just the first indication that any down move seeing here with unexpected downward pressure is not really surprising. It is just more confirming that the larger time picture has changed for that industry. But okay, that's the long-term perspective. Let's also move forward to the shorter term daily perspective on that. So therefore, let's move just to the daily data series, which I've just shown here. Let me just remove the energy model here. So this is the daily data. By the way, here I have anchored the starting point here to that major low, similar to where we did it in a major analysis here. But that's nothing really important here to see this whole up leg. We see the spectrum at the bottom here. In that case, the spectrum is not as simple as it was on the weekly data series. So here we need to spend a little bit more time on thinking about which cycles would be important and would be important to pick here in that case. So we could use the ranking mechanism, which is shown here to the right. So this is an indication by our AI, not calling out any names here, helping us to interpret or read the spectrum the right way, and by all other data sets. So I will walk you through the process. Looking at the spectrum, I mean, let's do this jointly here first. We could indicate 1, 2, 3, 4 major peaks in that spectrum just from a quick visual inspection here. So the shortest one around 79 days or 80 days, which is almost on top of the list. Yeah, so that's the most, from a strength score, the most important cycle here. So this seems to impact price the most on a short-term scale. And then from the visual shape, that peak looks very nice. So that is the cycle we need to take into account. The second cycle then is showing up here with a length of 127 days. Yeah, which has also a nice visual shape, ranked as number 3. And strength is also good. Bartels, as for the first one, does not look so good. Same here to the third one, around 200 days. And then the fourth one, 288 days here to the right. From an amplitude perspective, this stands out. Also from the visual shape, it stands out. However, the strength score here is more on the lower end. So we need to take care. What strength means is, it means that the strength has not the highest impact on past price movements in the series. So even though the cycle is prominent in the data series, it does not have the highest impact on price movements. So you need to take care of that measurement, as the cycle might be there, but from the price oscillation of the data set, it might not be so dominant. So, and if you trade price, strength for sure is an important measurement. So you always need to combine those measures. Okay, so these are the 4 cycles coming into further consideration. Let's start with the shortest cycles. By the way, or just for fun, I've picked another method for visualization. Maybe let's use that today. But it's only visualization, so you could change in the configuration if you want to see a theoretical sine wave. Just deactivate zigzag. So this is what every cycle analyst mainly is doing. Or you could switch this to a kind of zigzag plot. Some favor zigzag plot. I do not favor zigzag, but to give you also a different kind of visualization, we could switch this on, which means it shows you the same cycle just in linear terms, going straight from the top to the bottom without the sine wave shape, which is anyhow a theoretical representation. So in general, it's just the same. So this is the 80-day cycle, which seems we are close to a peak or approaching a peak quite shortly. And yeah, same procedure. You need to cross-check major bottoms and tops in that market. So this is not the only single cycle I would rely on. As you see, it's not always on. So a single cycle here, at least 80 days, is not really reliable on that data series. So let's also use the 127. And you see here how the zigzag plot looks different in a composite style. So that's also interesting to see. Let's make this bigger here. So it's just the same, not stacking up different sine wave plots here. So instead of stacking up the individual zigzag plots here. So that seems to be more in favor of the price action. So those 2 cycles seem to have a more correlation with price moves here. So if you zoom in, you can see how this better correlates. So just picking those 2 cycles seems to have a very nice spot on major bottoms and peaks. So this is what I anyhow prefer, not too many cycles. And so let's bring also that longer term cycle, as we just need to be aware that it might not have been the highest impact on price. But anyhow, what I always said, the most important topic to watch in cycles is the next upcoming expected change in trend. We never look into a static forecast here to the right, because cycles, and even if we have selected a composite, that's even more important. If you select composites based on short-term cycles like the 80-day cycle, you need to realign that setting. So what's most important is the short-term next 1 or 2 turning points. But first, let's have a look at that composite. These 3 cycles seem to have a very good explanation of recent behavior for the past 5 years on daily data. So this is what I like to see, not more than 3 cycles being able to explain major moves here. And the upcoming projection is that we are again close to cyclic top. So early February. So we have end of January now. So I think it's next week setting up. So from the ideal timing perspective, but it's with the theoretical top here. So we are nearing that, and then expecting another daily down move into end of March. So said that, we had a perfect top here in summer. The long-term cycle here rolled over. So every past upswing we might have seen, or even the final topping period, then moved into a kind of sideways movement here. And now the next possible point where we have a short-term top is beginning of February. So now or next week, how how exact you want to have that timing here, which in the end shows you that a down move happening from a long-term perspective and from a short-term perspective is pretty much what the cycles anyhow suggest. So, or the upswing, not really the upswing, but from what we have seen here since December into January, so the final up move here, which has been on this cycle here, so is also perfectly what would have been to be expected. But now, and maybe we saw just the beginning of that, it would be no surprise that even more downward pressure comes into alignment at least until late March. So the next 4 weeks, no, the next 8 weeks. So we have February and March. So the 8 weeks seems to have the daily cycles on the semiconductor turning negative in alignment with the longer term weekly cycle on the semiconductors, which is already negative since late 2024. So that's, from a cyclic perspective, that's what I'm trying to say. It's no surprise what we're seeing now at the markets if this top arrives. And it's even more confirming because if you are in a condition where the long-term cycles has rolled over from up phase to downward phase, the market participants might be surprised by huge downside moves. But this is what you would expect if some kind of news, which is what happened over the weekend, if some news are coming out, it would amplify and accelerate in direction of the cycle. So what I'm trying to say is any positive news on the semiconductors would have maybe just lead to a continuation of the sideways movement we have seen since summer last year. But now any negative market comment, what will come out, will see a push to the downside. So it will be very hard anyhow in those downward phases with positive statesmen pushing up. So it will be more keep the status quo, or you must have positive news to keep the price level even sideways. While in this negative cyclic condition, any negative news will trigger a move to the downside. Not surprising for any cycle analyst, maybe only surprising for market participants who are still thinking in the old regime of an endless upswing cycle. So, and from a cyclic perspective, we have been forewarned on that. That's the semiconductor index from a cyclic perspective. Just to complete the picture, let's now switch to a technical chart, because if you are interested in taking some trade ideas out of that, which is not what we're doing here on the show, I just want to guide you what you should do. Always switch to some technical analysis once you have a perspective of the cycles, because you are able to improve your technical indicators by using the information what cycles are active. So timing wise, you have one information, what to expect, what's the main setting. Second, that's then also fine-tuned then from a technical perspective. And this is what I will show you here. This is just a pure price chart on the semiconductors on the top, nothing special. And at the bottom, you see a cyclic tuned RSI indicator. That indicator is available for the public use, so nothing you need to be thinking about. So freely available cyclic tuned RSI indicator. It's available for you. This is just optimized from a visual perspective, but the same indicator is available for free on the platform. So it's a standard RSI indicator. What you're seeing here, and this is what I want to take your attention to, is that it has two parameters here. So first, and that's the basic length parameter for any technical indicator. So nothing special here. So I'm using, and this is the recommendation, what you should always do, use half of the dominant cycle length. And as we are dealing with a daily chart here, so on the daily chart, the calculation of the relative strength index is set to 40 because the dominant cycle was 79. So 80 divided by 2, use 40 on the daily. And the background shading or the background color you see on that indicator is based on the calculation on the weekly data. So it's just the same indicator, a relative strength indicator on the weekly semiconductors index. You know the dominant cycle on the weekly is 180 weeks. Use half of that, means you set it to 90 for your calculation on the weekly RSI. That's it. The way it is visualized here is that the situations where the long term, so the weekly indicator line is below the lower band, is just shaded in green. So they are just oversold informations on the long term indication. And red shaded backgrounds is just when the weekly indicator line is above the upper threshold from the relative strength. So also basic reading of an RSI indicator, you just see it from a visual perspective more easy. We are just plotting at the daily. We are just indicating the times when also the weekly is overbought and oversold by this colored background. So, and what you are looking for is when you see short-term, so daily signals in the time zone, so in green or either red areas, which means that the weekly indicator is confirming a possible signal. So in these, let's start here in the green shaded areas, this is when the weekly indicates that we have an oversold market. So you then look out on a short-term basis when the daily indicator triggers a signal here from crossing below the lower band to the upside. So at this point here and at this point here. So you see exactly at those lows on those markets, we would have received buy signals. Same here. So this was the sell, buy. This was not a signal here because we just had the weekly, but no indication here. So that's it. Then the next time period. So this was 2022, right? So we have a daily series here. We just had the 2022 signal, and then it only showed up for the first time also on the technical perspective back in July last year. So this is, and we know this clean signal on a technical indicator is only possible due to the fact that you adjust the length of those technical indicators according to the length of the dominant cycle. Otherwise, you would see a lot of whipsaw signals on technical indicators, which will ruin any single strategy on that indicator here. But what I'm trying to make is this was anyhow last year already, the long-term cycle topped out, and we have seen the weekly and the daily signal here. But what we're now seeing here on the short-term perspective is that at least from the daily perspective, we have triggered another short-term sell signal here, which would indicate that maybe this short-term top expected for next week, from the cyclic pure timing perspective, from a price-based perspective, and that's why you always need to take into account time and price, that from a price point perspective, that top might have already arrived. So we see a left translation on the daily cycle, just putting that technical analysis into account. And yeah, also looking at your comments, which you are.
Alrighty, you can go and watch the rest of that video in the description. I think that was very good presentation. He showed you how to look for the cycles, and then he used the weekly cycle information for semiconductors, put it into TradingView to do the long-term shading of green and red on top of the daily cycle information of the S&P 500, and then using that to figure out where to find tops and bottoms. So I think, yeah, very useful information there. That's very esoteric, I suppose, but I think some of you guys might be very advanced and you want to learn that kind of stuff. it gives you some ideas of how, hey, you know about cycles, you know about the theory. And one of these days, yeah, we'll have to go over more and more about cycles with like the Dewey 41, I think 41 month cycle is the standard cycle that's used. 41 month, yeah, is about 180 weeks, right? There you go. So 180 week cycle. So yeah, look at those things. Look at those things, I think. So let's see, 41 months. Okay, in weeks. Yeah, I think that's 180. Yeah, about 180. So 178. So it's about 180. Okay, so very good. So you can do everything we do, and yeah, you're good. You're good. Let's see, White John Go, blah blah blah. Dude, I'm already rich, man. I don't care about being greedy, but you, on the other hand, you got to get up. So I understand you got to play all your gambling with options and stuff, try to get rich to catch up with me. But all right, I'm pretty content with just getting 10 G's a week or whatever like that. All right, okay, I'll see you guys. Please be careful out there in the markets. Please be careful. You're going to get your ass blown either way, because now we're at the point where you can't have an easy layup. All right, so you can contact me at crack, CRACK at JGHB. All right, I'll see you guys later if you sales. I don't think anything else. Oh, it's HB's birthday, so please give Portia some of your money, or HB some of your money. And yeah, HB2N, I believe, is his Cash App, or you can just go to Portia. See, yeah, I believe that's his Cash App. Pretty easy to remember. He always gets the easy one, isn't it? Yeah, it's easy. You said a lot of things, White John God. Hell, I know what to believe in. You say a lot of things. A lot of things are wrong too, so I don't give a fuck. All right, I'll see you guys. Yeah, say happy birthday to HB. Say I'm send him a message with the Cash App, HB2N, or yeah, I'll go to Portia, PORSHAJAYE $, right? And then we have PayPal, PORSHA at jghb.info. Later, guys. Later.
Feel like I should go. 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 Feel like I should go.